Ladies and gentlemen, welcome to our Q3 FY23 earnings conference call for Castrol India Limited. Please note that all participant lines will be in the listen-only mode. You can ask your questions after the opening statements. If you need assistance during the call, please press star then 0 on your touchtone phone to reach the operator. We have with us Mr. Sandeep Sangwan, Managing Director, Castrol India Limited, and Mr. Dipesh Bakshi, CFO and Whole-Time Director, Castrol India Limited. I now hand the conference over to Mr. Sangwan for his opening remarks.
Hi, good evening everyone. I hope you can hear me. First of all, thank you for joining the Castrol India's third quarter 2023 earnings call. I hope you and your family are doing well. We're pleased to share that Castrol India Limited delivered strong growth in the third quarter of 2023. And here I'd like to remind you that we follow the Jan to December calendar year for our reporting. Despite challenges from volatility in crude oil prices, inflationary pressures, and global uncertainties, we registered good growth, reflecting resilience and innovation in products and services. And to begin, first I invite Dipesh to talk you through and take you through the third quarter numbers and financial performance in detail. He will then also take this opportunity to share with you how the 9 months of this year have been. So Dipesh, over to you.
Thank you, Sandeep, and good evening to all of you. We announced our 3Q full year financial year 2023 results this afternoon. Here are some key financial highlights. In 3Q 2023, we reported a strong financial performance. Our revenue from operations was 1,183 crores, and this was up 6% year-on-year compared to 1,121 crores in 3Q 2022. Our profit before tax was 264 crores. This is a gain of 4% year-on-year compared to 254 crores in 3Q 2022. This also extended to a strong performance in the 9-month ending on 30th September 2023. During this 9-month period, the company registered a revenue from operations of 3,811 crores, achieving a growth of 6% compared to 3,598 crores in 9 months 2022. The PBT for the 9 months stood at 857 crores, growing by 1% from 845 crores in 9 months 2022. We have entered the last quarter with confidence and are optimistic of continued growth into the 2023 last quarter as well. I would now like to hand over to Sandeep.
Yeah, thanks Dipesh. Apart from the financial performance, I would like to draw your attention to some key business developments in Castrol India. In terms of our recent launches, the auto care range is gaining good traction and acceptance by trade. The entire range of products is now available in 18,000 outlets and e-commerce platforms across India. Castrol Magnatec 5W30 SUV is also doing well, catering to high-performance demands in SUVs, which accounts for 50% of personal mobility four-wheeler space. Our Badhte Raho Aage campaign is gaining steam as we go into the next leg, which will be an extensive on-ground activation specifically tailored to support truckers. This should boost our outreach into rural areas of the country to tap into the demand. For motorcycle enthusiasts, Castrol Power One partnered with JioCinema as associate streaming partner of Bharat GP, India's first MotoGP, and produced exclusive content that resonated with the performance biking community. In addition to out of home, the campaign went live on JioCinema and other digital channels. We're proud to share that our CSR initiative for truck drivers, Sarthi Mitra, completed 6 years of supporting truck drivers' health, well-being, and livelihoods. The initiative has improved the lives of over 200,000 truck drivers and their families across India to date. Sustainability and environment consciousness is an integral part of our business and our strategy. After having launched 100% post-consumer recycled, or PCR as we commonly know, bottles for Power One Ultimate last year, we successfully transitioned all our blow-molded high-density polyethylene HDPE bottles manufactured and distributed across our supply chain network with 30% PCR content. This migration will help us reduce our virgin plastic consumption by 1,800 metric tons, in addition to carbon emissions reduction by 2,600 metric tons per annum. During this period, we continue to expand our service and maintenance network. We now have 1,200 multi-brand passenger car workshops, over 5,500 bike points, and 47 Castrol Express oil change outlets at GOBP sites. It is heartening to say that our products, services, and processes are recognized by various industry bodies from time to time. Our Silvassa plant was recently awarded Platinum Award in Quality Excellence category and Gold Award in Occupational Health and Safety category by Apex India Foundation. Our Paharpur plant won Safety Excellence Award from Indian Chamber of Commerce and achieved 100% renewable electricity by sourcing international renewable energy certificates, allowing the plant to reduce 80% of its Scope 1 and Scope 2 carbon emissions. Patalganga plant continued its streak of external recognitions, winning Safety Award from National Safety Council of Maharashtra chapter. Our initiative to conduct ASBC certified EV readiness trainings to make car and bike mechanics in India EV ready is progressing well. We've trained over 200 mechanics across India by the end of this quarter. Going into the last quarter, our focus continues to be on strategic expansion in aftercare, electric vehicles, and industry partnerships for the service and maintenance of automobiles. These developments and initiatives should help us strengthen our market position going forward and give an optimistic outlook for the year. On that note, I would like to thank you for your attention and would like to open the session for your questions, feedback, and views. Thank you.
Thank you very much, Mr. Sangwan and Mr. Bakshi. We will now begin the question and answer session. Dear participants, if you wish to ask a question, please press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, please press star and 2. Participants are requested to use handsets while asking a question. Also, in lieu of the time, we will stick to 2 questions per person. If you have further questions, kindly rejoin the queue. Ladies and gentlemen, let us wait for a moment while the questions come in. The first question is from the line of Keval Kumar, an individual investor. Please go ahead.
Hello, myself Keval Kumar speaking from Delhi. Hello,
yes.
Am I audible?
Yes, we can hear you.
Yeah. My question is whether the company is thinking about expansion in EV battery business, as there will be demand for EV vehicles in the near future, and our products like oil, mobile oil, and grease, etc., lubricants will be at a diminishing stage. And is there any plan to enter into EV charging or EV battery manufacturing or EV battery selling or EV battery swapping business? Is there any such plan of the company?
So thank you, Mr. Keval Kumar, for your question.
Yeah.
I think as a company, we keep evaluating all growth opportunities related to automotive sector or any adjacencies around automotive sector. As I said, we launched auto care range of products this year, which we are getting a very good response. As far as EV batteries are concerned, we are already actively working on thermal solutions for EV batteries, and we have fluids that go into electric vehicles. So we already supply our thermal fluids for 2 of the largest EV OEMs in India, and we'll continue exploring any potential opportunities that we have. And I cannot talk about specifically batteries, whether we will get into that or not. But EVs, definitely from a thermal management of problems that EVs have, we have, in fact, if you remember, about 1.5 years ago, around that time, BP announced a £50 million investment in our global headquarters around thermal management of batteries, and that's an area of interest for us.
Thank you, sir.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may please press star and 1. The next question is from the line of Ayush Agarwal, an investor. Please go ahead.
I have 2 questions. The first one is regarding the EVs, like the previous person had asked. So when looking at your distribution network and looking at your third-party service centers, would the transition to EVs act as a headwind to their revenue? And the second question is regarding the indigenization of your fluids and other products business. So I've noticed that there are quite a lot of related party transactions. I'm sure a lot of raw material and even finished product is being imported from your global supply chain. Do you see an expansion in domestic production going forward?
So thanks, Ayush, for both your questions. Let me kind of answer both the questions. First of all, as far as impact of EVs is concerned in India, given low penetration of especially cars in India, our projections, our estimates show that, and so does what we've seen in the public domain from our competitors and various other players in the automotive sector. The Indian lubricant market will continue to be strong for the next, going well into late 30s and 2040. So the lubricants category will continue to grow, while emergence of electric vehicles will be there. And as I said in my response to earlier question, we are also working on EV fuels for electric vehicles. Okay, so that's our view of as far as EVs are concerned. So the market will stay robust and strong going into the 2030s and till late 2030s. As for, you spoke about indigenization, I think we have 3 plants in India which cater to almost all our kind of needs, and we manufacture all our lubricants except for a minimum quantity that we import, which are very high quality products, some in the industrial sector, some in the automotive sector. And as far as raw materials are concerned, whatever we can procure locally, our intent is always to procure locally, indigenously. But having said that, base oil, which is a key component which goes into manufacture of lubricants, and as India, we are a base oil deficit country, so everybody imports part of their requirements globally.
All right. Thank you for your answer.
Ayush, you are not audible at the moment.
Sorry, can you hear me now?
Yes, this is clearer. Please go ahead.
Yeah, sorry. I was just going to follow up on my first question. So my question was more about your third-party network, because as I understand it, a lot of your customers are actually licensed dealers and stuff, right? So do you see any kind of headwinds to their performance?
No, we haven't seen any kind of compression. As we're reporting, we've seen good top line growth on our business, and we expect that likely to continue. So that's why we're also kind of expanding our network.
All right. No further questions for now.
Thank you.
Thank you. The next question is from the line of Prashant Galfade from ISJ Securities. Please go ahead.
Hello.
You are audible, sir. Please go ahead with your question.
Okay. Thank you for the opportunity, sir. I have 2 questions. My first question is, as a Castrol India enters into the auto care segment, could you share insight on whether other subsidiaries within the Castrol International have entered into similar venture? And if so, how is the performance of their operations in the auto care segment? And my second question is, what is the volume of lubricants sold in the current quarter?
Okay. So maybe because I hand over the question to you.
Yeah. So the lubricant volume sold is this quarter is about 51 million liters.
Yeah. And then let me respond to the auto care question. I think there's certain other markets within the Castrol world globally which are selling auto care range of products. Okay, there's Turkey, there's China looking at these products. And I think we're seeing good momentum and month-on-month growth as we build this category and as we build this product line.
Hello.
Prashant, does that answer your question?
I could not hear the volume of lubricants sold.
51 million liters.
Okay, sir. Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. Thanks for the chance. Mr. Sangwan, I'm trying to sort of really, deconstruct your growth engines, and I'm alluding to, something you mentioned, I think 2 or 3 quarters back. But if I were to, for a minute, just keep aside the lubricant business and break up my question in 3 halves, you had spoken about the network expansion, the auto services, the bike points. Could you, point number 1, expand on what is the strategy there? How do you make sort of headwind? What's the addressable opportunity? Where have you reached in that journey? Point number 2, I'm at least not sure of how the key mobility solutions, digital business model proposition, what is it exactly? What is the investments that we have made? How do we sort of look to monetize on the investment there? What's the business model there? And third, you've spoken about the adjacencies, like the pilot auto care range. So could you suggest how we can, as analysts, track that particular space?
Yeah. So I think let me try and answer all 3 of your questions. So first of all, as far as network is concerned, we continue going from strength to strength. We cover almost about between 35 to 40,000 workshops today as part of our distribution network, and out of which we're creating a branded concept. So when I spoke about 1.5 years ago, 2 years ago, if you remember, we started with something called Castrol Auto Service Network, and today I'm very happy to say that we have more than 400 plus Castrol Auto Service workshops across 100 cities in India, and we continue expanding on that. We have about 5,500 bike points, and as I said, 40 express oil change centers where customers can buy oil on GOBP sites and change their oil. We also have about 40 express oil centers, 40 plus express oil centers in rural areas now, which are gaining good traction. So that IWS expansion will continue to be a focus area for us as we move ahead, because 2 things happen. How does it add value to our business? First of all, I think we get a larger share of the total oil and in that outlet. And the second is we are able to sell a much better product mix in those outlets, because these workshops are trained by us in selling better products to their customers. So that's kind of on the network. As far as key mobility solution is concerned, I think we finished the transaction in the first quarter of this year. We invested 487 crores in that to pick up a 7% stake in that organization. And key mobility is expanding. They're seeing good growth, both in network, both in terms of their top line revenue. I can't talk specific numbers for that. I guess we'll have to go to Cookie. But their efforts in digitizing the whole workshop space around availability of spare parts, giving quality customer experience from a service experience. They have company-owned, company-operated outlets. They have franchise workshops. And there are 2 synergies. So we sell our lubricants in their network, okay, and they sell their spare parts in our network. Those are kind of sources of value. And by joining two trusted brands, which is MyTVH and Castrol, I think we can deliver better consumer experience and customer experience in the automotive after market. On the third question, I think on AutoCare, early days, we've seen good traction, and I think I cannot say in the next quarter we'll be able to kind of share more granular details, but I think as we build this business, we are very positive on this business with the response that we've got from consumers and customers, because there's a general lack of good quality solutions available to consumers in this category that they can trust. And we'll be adding more products in the portfolio in the coming quarters. So I hope that answers your three questions.
Yeah. Could I ask you a follow-up?
Sorry to interrupt, sir. We request you to please rejoin the question queue for follow-up questions. The next question is from the line of Mohit Mehra from Guardian Capital. Please go ahead.
So this quarter-on-quarter dip in volume, is that due to monsoon or is some other factor at play as well?
Mohit, the line is not very clear. I request you to please use the handset while you're speaking.
Is it better now?
This is much better. Please go ahead.
Yeah, it is better now.
So the quarter-on-quarter dip in volumes, is that just due to monsoon or is there some other factor at play as well?
So I think essentially there is a seasonality impact. Typically, our quarter two seems to be, as a track record, the highest quarter amongst the quarters, and compared to quarter three, monsoon of course is an impact. There is an impact of agri, and therefore some of our segments like CVO, have a higher sale in quarter two compared to quarter three.
Got it. So could you provide a volume breakup amongst the different segments for this quarter?
Yeah, so look, our portfolio as such is about 40%. The volume breakup would be in personal mobility.
Okay.
About 35% would be in CVO, commercial vehicle, and about 15% would be industrial.
Got it. And one final thing, so we are invested almost 500 odd crores in this e-mobility venture.
Ladies and gentlemen, the current participant seems to have dropped from the queue. Participants, we are in the last 15 minutes of the call. Please press star and 1 if you wish to ask a question. The next question is from the line of Varun Arora from B&K Securities India Private Limited. Please go ahead.
Hi, sir. Thank you for the opportunity. So on this quarter-on-quarter, so the revenue actually decreased by 11%. So could you care to answer on that? I know that you are saying seasonality, so but still a bit elaboration would be helpful.
Sorry, I didn't get the last part of your question.
So I was saying that if you can elaborate a bit on quarter-on-quarter performance on revenue growth, since it went down by 11%.
Yeah, so I think let me talk to that. You're right, the sequential quarter is lower, but that's traditionally been the case with us, even if I go back 10, 15 years. The third quarter tends to be the lowest for us, okay? And then things again pick up as the agri season picks up in September, October period. Quarter four picks up again for us. So, and if I compare it to same quarter last year, we grew 8%. So at least we don't see that as an area of concern. It's the normal pattern. In fact, if I can say anything, on the volume front, this is possibly the second highest we've ever delivered. So.
Okay, sir. Thank you.
Thank you. The next question is from the line of Giman Mathai Odagenil from Cactus. Please go ahead.
Hi, good evening. So my question is, with the current Israel-Palestine war, how good are we placed? Because our Union Oil Minister Hardeep Singh Puri has said that we'll be closely monitoring the Israel-Hamas conflict, and if it spreads to the other Middle Eastern parts, is it going to affect the business in any way, and how well are we poised to handle such a situation?
So let me try and answer the question in two parts. First of all, what will be the impact of Israel and Palestine or Hamas conflict? I think it's not for us to speculate on those matters. These are matters of international concern, and I think let's see how that unfolds. But I think as far as handling uncertainty is concerned, Castrol is very well poised. Okay, so if I go back even to the COVID years in 2020, when nobody knew what was happening in the world, we still delivered profit. We still served our customers, and I think a lot of our base oil and input materials we import, but they come from Singapore side or Asia Pacific countries. So I think on that we are pretty well poised, and we have the capacity and the capability to handle any kind of uncertainties. The only thing I would say is inflationary pressures would increase. Okay, we see crude oil going up, we see base oil costs going up, and that is the volatility or uncertainty. We'll have to live with and manage that.
Got it. Thank you very much for answering that.
Thank you. Participants, if you wish to ask questions, you may please press star and 1. The next question is from the line of Meeraj from Arihant Capital. Please go ahead.
Yeah, thank you for taking my question, sir. My question is regarding the raw material price. So, what was the value for base oil in the quarter gone by and current value? And if you could also highlight on the additives that had surged recently over the past 2 years, what are the current prices for that?
Yeah, so I think on an average, I would say that between the sequential quarter, the base oil price has been flattish. I don't think there has been a big change. As Sandeep said, we do expect the prices to go up in the next 3 to 6 months. Additives actually has it's behaved quite differently compared to base oil, and compared to last year, I would say at least there has been an increase to the extent of 15 to 20%.
Understood, right. And the synthetic oils, sir, for this quarter, how much would it have been of our total revenues?
Synthetics are in the range of about 10 to 12% contribution, and I think we're seeing good growth in synthetic oils as the market shifts to better performing vehicles.
Understood. Okay, yeah. That's it from my side. Thank you so much.
Thank you.
The next question is from the line of Ayush Agarwal, an individual investor. Please go ahead.
I have 2 questions. Both are relating to your coming calendar year, like 2024 onwards. So the first question is regarding the recycled plastic content, which has increased substantially over the past few years. So now that it has reached 30%, what kind of percentage targets are we expecting going forward? And the second question is regarding the growth of the dealer network. What kind of expansion are we expecting there in the years going forward in percentage terms?
So I think I cannot give you, Ayush, very specific numbers. First of all, I think on the recycled plastic, our intent is to keep increasing the content, and we keep looking at solutions available which can withstand our quality requirements. And I think, first of all, I'd like to say that we will be compliant with the government policy, whatever is the government policy on recycled plastics, as an extended producer responsibility. The second is we'll keep looking at solutions which help us reduce our plastic content and increase PCR. Now, specific target is difficult to give for 24, but that's an area of focus. The second question you had was expansion. I think expansion is always on our mind. We are possibly, as far as the retail market is concerned, we're the largest distributed lubricant player in the country. And now we are looking at going deeper into India or deeper into Bharat. That is where the demand is coming. And semi-urban and rural areas is the next level of expansion that we are looking at.
So, looking at this recycled plastic content, does that actually increase the cost of the packaging materials that we're using?
So far we've been able to manage costs, but at some point in time it will become a demand-supply situation. But we are very conscious of that. But I think we are committed to sustainability, and I think we will find ways to be sustainable in a cost-efficient manner. That's what I'd like to say.
All right. Thank you for answering my questions.
Thank you. The next question is from the line of Prashant Galfade from ISJ Securities. Please go ahead.
Hello. I have two questions, sir. My first question is, what is the revenue contribution of on-EV transmission fluid and auto care services in total revenue in the current quarter? And my second question is, how much money has the company invested in the auto care segment so far, and what is the future investment plan? Additionally, could you share the business strategy for growing this segment?
Yeah. So let me answer the question. Sorry, I'm just trying to remember what was the first question. There were three questions. First question would be aftermarket, auto care and... No, so let me do auto care and then I'll come back. Yeah. Sorry, I remember. EV fluids and auto care contribution, it's very marginal. I think it's still very small, very low single digits. Okay, but this will grow in the future. The second is from an investment perspective. I think we haven't put our own manufacturing facility for auto care. It's a third-party supply arrangement. Okay, and that's how we operate. What is the strategy? I think the strategy is simply to serve consumers and customers, because I think Indian consumers lack availability of good after auto care products, and as the penetration of vehicles increase, we believe this category will grow. We have good branded competitors coming into this category, which will also help energize the whole category of auto care segment, and that's why we kind of started straight in this.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Sumanta Ghosh, an individual investor. Please go ahead.
Hello, sir. Good evening.
Good evening.
I have just one question. Like Castrol, part of your product line, two-wheeler forms a very important product line. And with the advent or the emanating challenge of almost 20% of scooters are now EVs. So how do you foresee, how will you combat, because it is a very premium and a very well accepted product from Castrol brand to the consumer?
Yeah. So thanks for asking that question. Very good question. And I think, first of all, I would say electrification is good for the country, it's good for the environment, and it's good for consumers. So we fully support electrification in terms of bringing solutions around electric vehicles to OEMs, to our consumers. And I'm sure you would have seen, we've also launched a range of EV fluids under the brand of Castrol On, okay, which is transmission fluids, greases, coolants for electric vehicles. The second thing is, you're right. I think as the electrification grows, it will have an impact on two-wheeler segment. But at the same time, I think that the growth that we see in cars, because the penetration of cars is so low in India, and the growth we see in cars will more or less, in fact, compensate the shrinkage that possibly we'll see in the two-wheeler segment. And the commercial vehicle segment and agri segment will also continue to stay robust. So I think everything will balance out, and on a total basis, we see the market still growing at about 3%, 3 to 5% range over the next 10 to 15 years.
Okay. Thank you.
Thank you. The next question is from the line of Gaurav from Pravika. Please go ahead.
Thanks for giving me an opportunity to ask the question. I would like to know the EPS of this quarter and comparison of EPS with the last quarter and last 9 months in terms of percentage.
Yeah, just hang on. Can you hear us?
I can hear you.
Okay.
Am I audible?
Yeah. We'll just share the number with you. So just give us.
Yeah.
So, yeah. Your question was how much was the EPS for quarter ended this current quarter, right?
Yes. My question is EPS for current quarter and EPS comparison of last quarter to current quarter and last 9 months to current 9 months.
Okay. So it's there in the press release. The non-annualized number is 1.97 for this quarter. Compared to last quarter, sequential quarter, it was 2.28. And for the 9 months this year, it's been 6.29, again, non-annualized.
Okay, thanks. And what about the last quarter? Last 9 months EPS with the same period?
Last 9 months was same, 6.29. As you saw, our profit was almost on the similar lines. So EPS is also similar.
Thanks for clarifying.
6.29. Yeah.
Thank you. The next question is from the line of Mohit from Guardian Capital. Please go ahead.
Thank you. So I was asking before and I got cut off. We've spent almost 500 crores for this partnership, the e-mobility partnership. So is it possible to share the volumes that we're getting out of it, the volume, profitability, whatever, some number?
So I think, Mohit, as I said, first of all, we invested in this company from a strategic investment perspective because I think e-mobility is trying to digitize the automotive aftermarket, and it'll take time as it progresses. And the second thing is we're selling lubricants to them, but at this stage we're not in a position to share the exact numbers on what we make from there or how much lubricants we sell. But we committed to this partnership, we committed to this investment because I think in the long run it's going to be a good thing for the Indian automotive aftermarket.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may please press star and 1 to ask a question. The next question is from the line of Ayush Agarwal, an individual investor. Please go ahead.
So I'd just like to follow up on the recycled plastic discussion that we just had. So you mentioned that you intend to follow the extended producing responsibility guidelines that CPCB has set for you. Are you able to disclose the targets that the government has set?
No, the government wants us by next year. I think that's, if I remember correctly, by next year we have to collect 100% of plastic that we put back in the market. And in fact, we are already doing that this year. So.
All right. And going forward, I guess it will stay at 100%, or are they expecting an even further increase?
I think that's more than 100% is for the government to decide, but I can't comment on government policy. All we're saying is we will be compliant with the government policy.
Right. No, because usually when the government sets targets, they give targets for multiple years together. So that is why I wanted to ask.
I don't have an answer right now, but if the government has already issued targets for multiple years, I think that should be available in public domain anyway. So.
All right. Thank you.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Yeah, thank you for the follow-up question, sir. Just wanted to understand our revenue model. How do we charge? Is it based on any escalation in input prices, or how does the revenue model function and the profitability over there as well?
Yeah. So I think what we have is a pricing framework, okay, a strategic pricing framework that we operate against. And end of the day, the price we charge for our products is based on the value we deliver to our consumers and customers and what they're willing to pay for good quality products. And if there are any kind of fluctuations in input costs, like any other manufacturer, we take our decisions based on the environment.
Okay, so would we be passing it on based on a lag, the increase and decrease, and what would be our safe set margins, the margins you would require to make bare minimum?
I would like to give a forward-facing statement into what pricing actions we'll take. We monitor the environment on a consistent basis, and whenever we need to intervene, we do. And historically, we've been able to protect our margins, and you know the gross profit that we operate. It's available in our financial statements. And the intent is, and we said that publicly, is to continue operating on an EBITDA level of about 23%, 23 to 25%. So.
Okay, thank you.
Thank you. This brings us to the end of the call. On behalf of Castrol India Limited, I thank you for joining this call. You may now disconnect your lines. Wish you a good day ahead.